Hey, it's Joe Harrison of Team Lions and Roy LePage. We're once again talking about the market and everything that's going on with it. And today I got a very special guest with me. Get questions all the time about interest rates and stuff like that. So who else better to get one of the best in the biz? Ashif Muhamed, mortgage broker extraordinaire. Can tell you a little bit about himself, and we're going to talk a little bit about interest rates and the market today.
Perfect. Thanks, Joe. Ashif Muhamed, mortgage agent with Fidus Mortgages. We are a franchise of Dominion Lending Centers. A little bit of background on myself, 30 years in the banking industry. And my passion is helping clients achieve their home ambitions. And that's what I love doing. So I'd love to have a conversation and try to answer some of the questions that your clients might have.
Wonderful. Well, that's what we're here to do today, try and get people to have a better understanding about what's going on out there and about the interest rates, because I mean, one of the things that we've been having, as I'm sure you know, interest rates have been dropping over the last little bit, but the last announcement was that they're going to hold firm. Is that something that you think is going to be kind of the course now, or do you think there's going to be more drops coming in? What do you think is going to be happening with that?
That's a good question. Actually, a lot of clients ask me this. The first thing I say, I'm not an economist, first of all, right? So, but what I do is I actually listen to a lot of economists and I try to kind of gather what they say. A lot of them are expecting another 75 basis point drop in variable rates.
In variable rates.
Right? So probably by the end of 2026, we'll see another 75 basis points drop in rates.
Okay.
However, things are fluid.
Right.
We don't know what our friends down in the south are going to do with the tariffs.
Yep.
Everything changes day by day. The message changes. You know, we have Mark Carney now at the helm of Leading Canada.
Yeah.
Which, you know, he has a background in dealing with these kind of situations.
Right.
So that's what we're anticipating. But the one thing we want to make sure that people understand, even if variable rates drop, that doesn't mean fixed rates will drop as well too. Fixed rates are tied to the bond yield.
Right.
Right? So when clients usually ask me, how come fixed rates haven't come down as much as, let's say, the variable rate?
Right.
Because they are tied to the bond yield.
We get that question all the time as well. What do you think is better? Do you think it's better to go with the fixed rate? Do you think it's better to take the risk and go with the variable rate? What do you usually tell your clients when they sit down with you?
Exactly. So that's a good question. I'll give you my personal preference on what I would do if I was the client. I usually would go with the variable. Okay. And I'll kind of explain sort of the pros and cons. I'm hoping rates will come down to their 75 points.
Okay. And what would that bring us to if it came down to?
So 4.95 less 0.75 will give us 4.20, if I did my math correctly.
Yep.
Right, I don't have my calculator in front of me.
Yeah. So we haven't come just below the 3. We haven't come below the 4 yet. We're still hovering right above it.
Just above it. Yeah. For myself, I'm anticipating rates will come down. If rates stay the same, my cash flow will help me make sure I stay within budget of my mortgage payment. Okay. Once variable rates do come down, I feel that this is the lowest point. I can actually lock into a fixed with no penalty. So this is the conversation I have with clients. Are you comfortable with rates going up or down? Because they could go up. We don't know. Right? If you're not comfortable, or if a client's budget or cash flow does not support that, we'll talk about the pros and cons of a fixed rate. Whether 3-year, 4-year, or 5-year. Okay. Especially for first-time home buyers getting in, because they don't know what the actual cost of home ownership is. Right. You got all your maintenance fees. You might have to replace the roof, new furnace, whatever the case is. So clients like to have that fixed budget, knowing what they're going to pay every single month for the next few years. Comfort level, right? But some clients will take that risk. You know what? I'm okay if it goes up. Then at that one point, I will lock in. Or some clients actually stay in variable, right? So it depends on the clients. It depends on their comfort level. It depends on their cash flow as well too. More importantly, Joe, the other thing you got to think about is not just locking in for 3 or 5 years. Is what is your goals? If you're looking to relocate, or if you're anticipating a life event to happen, you don't want to lock in too long, because if you need to break that mortgage,
Yep.
you're going to incur a penalty or
Absolutely.
costs. Right?
Yeah, and a lot of people, they don't think about things like that.
Correct, exactly. So it's not just about the rate, it's about your goals and your cash flow as well too.
Absolutely, absolutely. And as a lot of you know, there's been a lot of stuff going on globally that affect our markets. I mean, we've had the Trump tariffs, we've had uncertainty in Europe and things like that. Do you find globally when things like that happen, they affect our market and the rates in our market like that?
Correct. You know, in the real estate business,
Yep.
what's happening right now, I'm seeing in the last 4 or 5 months. Because I'm going to go back a little bit to late 2024, where people like, you know, this is going to be a hot real estate market. I'm sure you're
Yes.
preparing for it too.
Yep.
But ever since January, things have slowed down. Why? Because of economic uncertainty.
Right.
The number one thing I'm hearing from clients is, will I have a job in 6 months?
Right.
Right?
Yep.
The other thing is, what's going to happen? Are interest rates going to skyrocket, or are they going to drop any further? So people are not making any decisions right now.
Especially maybe first-time home buyers, they may not know about. When you see the rate that's there, there's something called a stress test.
Correct.
Do you want to tell us a little bit about that?
Yeah.
Because I think a lot of people don't know that it even exists.
So how it works is basically it's the higher of 5.25 or contract plus 2%, contract rate plus 2%.
Okay.
So let's say, for instance, today's rate is 4.35 for a 5-year fixed.
Okay.
As a mortgage lender, I need to stress it. So if a client is looking to buy a home, I got to put that rate at 6.5, and I got to stress their income against it.
Okay.
I think it's a good thing.
Okay.
And the reason being I say that, a lot of people who got into their homes in 2020 and 2021, they got in at 2.25, 2.7, 1.99.
Yes.
Now their mortgages are coming up for renewal and the rates are double.
Yes.
If we didn't have that stress test in place, a lot of people won't be able to afford their homes today.
Right.
So I think it is a viable decision to stress test a client when qualifying them for a mortgage, because we got to make sure that they're prepared for a higher rates in the future.
Right. So yeah, good point about the stress test. I agree with you. I think having that kind of covers a lot of things, but I think there are some other risk factors when people take on a mortgage that they don't typically think about.
Yep.
What are some of the common ones that you run into when someone takes on a mortgage that they may not have thought about?
Correct, yeah. You know, there's a few things that come to mind. Number one, we've seen a very high increase in housing prices over the last little while.
Yes.
Right? So people are thinking, I'll get in now, and hopefully in about 3 or 5 years, I'll make some equity into the home. Depending on the market, that may not happen, right? So people don't really plan for the next 20 years. They're only thinking this next year or 2 years. The other thing is taking on a mortgage right now. I would say the biggest thing is people, I ask clients this question all the time, is your job or employment recession proof?
Right, that's a good one.
Right?
That's a great one.
If it is, great. You know you have stability. You can continue to make your mortgage payments and feel stress-free. But I think a lot of people right now are kind of feeling the pinch right now, because not only is there uncertainty, but the average price of our goods and services we buy every single day have gone up.
Yep.
So even though your mortgage payment stays the same, your salary may go up 1 to 3%.
Yep.
But the average cost of goods and services is going up between 5 to 10%.
Yeah.
Right? So things that people don't think about if they take a mortgage this year or anytime soon.
I remember back during the height of the market during COVID and all of that, my heart went out to all the young couples that were trying to get in the market, and they just couldn't because they were being outbid by more established families and whatever, and they just couldn't get in the market. And then a couple years later, they tried to get in the market, but they couldn't do it because they weren't being approved because the rates had gone up and they couldn't qualify. So now that the rates are down a bit, the prices of houses have come down a bit, is there anything or any suggestions or anything like that that you could tell young couples, new people trying to get into the market that may be first time applying for a mortgage?
So I kind of go through a couple of different things with clients. Number one, we talk about goals, family, life events. Newer couple, are they planning to start a family in the next little while, right? Because what's going to happen?
Yep.
One salary is going to slightly decrease, there'll be increasing costs, right?
Yes.
It's all about budgeting and cash flow planning. It's not just, what my mortgage rate is, right? What is the lowest rate?
Right.
I can tell you what the lowest rate is, but it might not make sense for the client.
Yep.
The other thing is if you're shopping around, make sure you do a pre-approval.
Absolutely.
Right.
I can't tell you enough how many times as a real estate agent that we have a house for sale, someone comes in, puts in an offer, and they haven't been pre-approved yet. And then they lose the house. And then that time has been wasted that we've been waiting for them to fulfill their conditions, and they can't because they haven't been pre-approved. And it's just a big waste of everyone's time. So please get pre-approved. Sit down with the mortgage brokers, let them do their jobs, and it just makes everything go so much easier. Sitting down with a specialist is definitely worth it. And I can speak on behalf of many sellers that if there are numerous offers that have come in, sometimes the highest price isn't always the best price. A seller will often take a house $10,000 less if they know someone's already been pre-approved, that they don't have a condition of financing. So it's a big factor. Sometimes having a clean offer is much better than waiting around to see if someone is even going to get qualified.
Yeah, it's a very good point. If I can just add like a specific example to
Absolutely.
this. A pre-approval, sometimes a little bit of misconception as well too.
Okay.
Like if you and your wife walk into a bank or work with a mortgage agent, sometimes what they'll do, they will pull your credit bureau.
Yep.
Right? And the other thing they'll ask you, how much do you make, Joe? And I've seen this in the past and dealt with this many times in the banking industry where the clients will state what they make. We'll put that onto the pre-approval application.
Yeah.
And the time that you find that dream home, you got to put in a live application.
Yes.
And when we collect your documents, your income documents, you don't really make how much you stated you make. It's so true for business for self-employed individuals because we kind of think about what the revenues receive versus what we declare.
Right.
What I would say to every single client who are looking for a pre-approval, number one, your credit check. Okay. Number two, what I do for my clients, I will actually gather 2 years' income. I average it out based on their type of employment.
Yep.
And I use that document to determine their pre-approval.
Right.
Right. What I do is I will send the pre-approval to 2 or 3 different lenders.
Okay.
Like your big banks.
Yep.
In case if, let's say, for example, the client might not be approved at a bank, we also have alternative lenders that we deal with.
Yep.
Let's say maybe your credit score may be slightly bruised or your income doesn't qualify because you don't declare enough income. But for most self-employed individuals, we have alternative solutions where we can get you approved through an alternative lender. Right. So it's just doing your homework in the beginning as a mortgage agent.
Yep.
So when the clients can make that offer, as you mentioned, they want to go in with confidence.
Yep.
Maybe they want to go in with no conditions financing, right? They need to make sure that they will get approved because if they don't get approved, then they're 100% liable for that contract.
Another question that you kind of touched on it that I just want to touch on as well. A lot of buyers out there, they're not sure about the difference between a mortgage broker and say your typical bank.
Correct.
They're a little bit shy to go towards a mortgage broker because they're not entirely sure what you guys do, how it can be beneficial. Do you want to just touch a little bit about the difference between a mortgage broker as opposed to just going to your typical institution and getting your mortgage there?
I'll talk about 2 different things. I used to work in different spaces.
Yes, absolutely. You know more than anyone.
Yeah, so whether you have a relationship with a big bank, normally clients will go there to get their mortgage or pre-approval, right? Because they feel comfortable, they have a relationship.
Yeah.
That's perfectly fine. If you feel comfortable with your banker and you trust that bank is going to do the right thing for you, absolutely, go with that bank.
Yep.
The difference between a bank and a mortgage broker is this. Let's say, for instance, your bank does not qualify you or can't approve you because of whatever factor that is, whether it's income or credit score or whatnot.
Yep.
What I do as a mortgage broker is I have alternative channels where I can get you approved. So let's say you don't have a specific bank you want to deal with. What I do is I shop around for you. So I'll go to the TD and the Bank of Montreal and the Scotia. I say, got this great client. Here's a pre-approval, found a property. And I actually work with the banks to see who's going to give you the better rate.
Okay.
So I do the
You do the footwork for them.
yes, as you not going into every single branch and trying to figure out what the best rate is.
Yep.
So I try to get the approval first and then the best rate. But what happens if you can't get approved?
Right.
That's where a mortgage broker will come in.
Okay.
We find a solution for you, whether it's an alternative, worst case scenario could be a private. But keep in mind those are short-term solutions.
Okay.
Because my goal as a mortgage broker is to then get you out of the alternative space or alternative lender and see what we can do to get you into an A lending bank, which
Okay.
is one of the big banks in Canada, or lenders as well too.
And I'm gonna ask you a question because I know people ask, does it cost money to work with a mortgage broker? Does it cost that client to work with you?
Correct. It is a good question. If I get a deal done and it's for a client with a typical A lender, like one of the big banks or monoline lenders,
Yep.
there's no cost. I get paid by the lender.
Okay. Wonderful. Good to know.
Alternative,
Yep.
sometimes it could be a fee. It could be up to 1%,
Okay.
but that's something I will work with the lender.
Okay.
If the lender pays me it's called the finder's fee,
Yep.
to basically place the mortgage at their facility,
Mm-hmm.
they will pay me directly. I don't charge the client.
Wonderful.
In certain circumstances where it's a very complex deal, there might be a fee, but I let the clients know upfront.
Upfront. That's great.
Private, there definitely will be,
Okay.
because there's going to be a fee charged by the lender and also by the broker as well too.
Gotcha.
Because with privates, they don't actually pay the mortgage agent or mortgage broker,
Okay.
right? So we actually charge the client
Right.
for these services,
Yep.
right?
Yep.
So,
Makes sense.
but what I do is I try to find the most cost efficient laneway for the client, but we got to make sure that we explain all the fees right up front.
Right.
Even when there's renewal fees or whatnot, all those fees have to be communicated to the client upfront.
I know at the beginning of the year they had announced some new mortgage changes, some new rules. I think there was extensions and stuff like that. Do you want to just touch on some of those?
So number one, for individuals who want to get an insured mortgage, it used to be up to $1 million.
Yep.
Now it can go up to $1.5 million.
Okay.
Where basically it'll be guaranteed by an insured mortgage, like CMHC or Sagen in Canada. The other change is for first-time home buyers, amortization goes from 25 years up to 30 years.
Wow.
Okay, which is good. A lot of clients are like, well, I don't want to take 30 years to pay off my mortgage. It's an option for you in the early days when cash flow might be a little bit tight for more affordability.
Yep.
But I always let clients know that you always have the option to prepay your mortgage as well too, to pay it down quicker. So those are some of the changes. Another change that occurred is if a client is looking to refinance their home and they're looking to add a secondary suite or a garden suite.
Yeah.
There are some insured mortgages. We can go up to 90% of value of the home. And there's also a limit in terms of how much you can spend towards contracting amount, or renovation amount, to add that second suite or a garden suite to the property as well too.
Amazing. Amazing. I wonder if you get this question, because we always get it a lot. Should I buy now? Should I wait? Do you get that question
Oh, yeah.
asked to you a lot? And what do you normally tell people about?
Yeah, here's the thing. Right now, we're expecting rates to be lower in the next year or so.
Yep.
But as soon as rates start coming down, what's going to happen? The real estate prices will start going up.
That's right.
Right?
Yep.
Because now there's going to be pent-up demand. So I will say to the clients, either you buy now or you wait, and you're going to be paying either more $50,000 or $100,000 more for that home, even though you save 50 basis points on that mortgage. So that's why I tell clients is you can't time the market.
Yep.
If you love the home, you think it's going to be your forever home, and you don't want to pay any more than what it is, the market value is today, then this is where you should get in.
Absolutely. Yeah, I completely agree. I think it's a great time right now. Rates have come down. I mean, are they going to go lower? Yeah, maybe they might. But the prices of houses have come down and they haven't gone back up yet. So it's a great time if you're a buyer to get out there and you're looking. If you have any questions, feel free to ask me at Joe Harrison. You can reach me through various channels, call our website. You can reach Ashif. He'll be happy to answer any of your questions. Do you want to tell them a little bit where they can find you?
For sure. Facebook, LinkedIn. My email is ashif@fidusmortgages.ca. Phone number 647-929-7692. Happy to have a conversation.
Amazing.
Thanks,
Appreciate
Joe.
you having out.
You too.
That's fantastic. Everyone have a great day.
Thank you.